Hi and welcome to TCM Education. In this video we want to elaborate and spend 15 minutes, up to 15 minutes on the penarial question. Which trade is the preferred one? The rabbit trade or the turtle trade? And I'm sure that there are, as always, the people that will love to see a stock uptrending all day for 5 to 6 hours. Others would love to see a $5 intraday move in 5 minutes, and anywhere in between. So let's take this week's gainers, for example, decide which is which, and analyze the charts and see what happened actually here. This is the weekend of June 13. So on our list, as you can see, guys, we have a couple of big movers, all of them liquid or liquid enough. We have here, let's call it two double-digit movers, Arrow and Age USA, and another 60, nearly 70% mover in Neon. Those will be our rabbits. And then we have plenty of normal one-digit movers, starting with VOYG. We've seen it this week already. SolarEdge Technology, Oracle, Darling Ingredients, FRO. Let's leave SEDG and VOYG in the middle and stick to Oracle and FRO, maybe even RH. You know what? Let's go with those three if we have time. DAR, Oracle, and FRO versus AGUSA, Arrow, and Neon. Okay, let's dive fast into it. See the charts and elaborate. First of all, Arrow. What is Arrow? Now, for anybody that doesn't know what a SPAC is, SPAC is a special acquisition where a company that's traded in an exchange, let's call it the NASDAQ, doesn't have any operation, no sales, no expenses. Maybe 2 or 3 people are still working at that company, which is, not producing anything, not taking any expenses. And then a company that doesn't have basically the logistics, the ability to apply for NASDAQ registration process, which is takes a lot of time, takes a lot of money, and those companies combine. The company that has the license to trade on the exchange and the company that has sales, an operation, maybe it's profitable, and those combine together to raise money and create a new NASDAQ entity under a new name. That's the SPAC. So this is a SPAC. And how do you know that it's a SPAC? You don't know, you just need to. Nobody knows about those companies. They're totally off radar. Now, how do you know it's a SPAC? Take a look at this $10 price action where it started to trade. Then there are some news, and the price starts climbing, and every time it climbs, it's actually halted for whatever reason by the NASDAQ according to intraday rules, and I don't know what those rules are, but there are some rules, and you can see that there are 1, 2, 3, 4 intraday holds, maybe 5. Now again, and the price climbs from 10 to 40, almost 40. That's 4 folds. That's 300%, which is beautiful for the investors, and they can take money off the table. Now, the reason why you can see those gaps and the aggressive move is that, and again, I'm guessing here, I don't know anything, and nothing has yet to be published. The liquidity here is very poor, or most likely is, so not a lot of shares are being traded, so the float is very, very shallow, and that's why if there is demand, the price will jump. When there's less demand and sellers start taking control, the price swings to the downside can be aggressive as well. Most likely it's not shortable, but I don't know. It's only the first day. I'm just talking out of experience. So the stocks moves 300%, then goes down half of its, almost half of its value, and still closes up 140%, which make it a triple-digit winner. And this is only the first day. Maybe Monday is going to open at 50 and trade to 120, and 2 weeks later it's going to be back to, I don't know, $5 or 10. We cannot control that. We're just talking about intraday. Now, is this stock manageable? And I'm looking at the chart, and you can see percentage-wise 20 to 30% pullbacks in a matter of minutes. When I say minutes, 10, 15, 20 minutes. So it's clear that this is, and I don't know what are the spreads, and up front, without getting the real live data, it looks like a very, very aggressive type of intraday movement. Super tough to control and manage. Stop losses won't work here because there will be slippage and very poor liquidity, and you're taking lots of risk here working this type of a trade, but there is a lot of reward. That's the summary of this rabbit. Let's move to another rabbit. Rabbit number 2, Houston, or HUSA. Okay, that's Houston American Energy. In this case, it's a little bit easier because let's see what happens here. First of all, there's a gap overnight. That's already a signal that something positive happened. Now you can prepare. Then the stock goes to this breakout. Let me actually make a point here. So this is the breakout. Those are the highs of the day. At least it's manageable, this move, this risk. And I'm not talking about volumes and spreads. And the stock really breaks those highs, delivers move from 1550 to almost 20, and pretty much since what is it now, 10:30 or 11, the price action is flat. So if there is some money to be made, of course there is this first breakout trade, then the continuation play, and then the stock dies. However, the price action, now is being that it's not a SPAC, I assume that it can stay on the radar. Maybe there's going to be continuation here, and we'll check on the volumes in a bit. And the third one is another NEOD. Hold on a second. Up only 68%. Now you can see again the phenomenon of the SPAC. It trades basically at $10, and then the news are coming in. Whatever the news are, the stock is up. The volume is amazing. This is something that it's actually manageable and tradable, this stock. NEON, I'm going to write it down on my list here and follow up on it on Monday. NEON looks good. No gaps in the trade. No, looks way better than the Aero Group, which started trading and actually more than at one point nearly quadrupled. This one looks more manageable. And again, I don't know what is the business of Neon. Again, it's a SPAC. We can read about all those stocks over the weekend. Now, regarding the volumes, the list here is pretty much clear. And you can see the volume in Aero was 14 million shares. In Houston American Energy, 28 million shares. I'm surprised. Neon only 4 million shares. That's an ugly number for a first day move. Okay, that race is clearly a red flag. I mean, first day 4 million, it means trouble come Monday. Again, it's possible that I made a mistake, but again, no harm done. We'll check it on Monday. Now let's go to the potential turtle plays. Let's start first with DAR. This is DAR. What happened here? At the open, pretty much, the stock makes a huge move on some news. I don't think there were earnings. I think there was some other type of news, and then creates a bull flag formation, which was probably the only place to get in on board at that 35 to 35.50 level, and it ended up trading up nearly $2 before it pulled back. Was it easy to observe? I think if you are paying attention to the gainers losers list, this channel here was viable. It's a pure bull flag formation. You have the entry, you have the stop loss pretty much painted on the chart, and this is a potentially technical trade that ended up being a winner. That's a DAR. Oracle, need I say something about this miracle? 2-day miracle in Oracle, up another 7%. So Thursday, I think 7 to 10%. Tomorrow another 10%. What's amazing about Oracle, and this is really something that doesn't happen, shame on the market, very often. Take a look at the price section. I mean, the uptrend is nearly perfect. Not perfect, but nearly perfect. So there are a couple of pullbacks, one here, and the mini pullback here. But overall, unbelievable trend, second day in a row. Looks super extended now. Can it continue? I mean, it did it without any market support, guys. The Nasdaq closed down 1.3 yesterday. The S&P more than 1, and the Dow Jones 1.8. So absolutely no market support for Oracle heading into tomorrow's winner. And the third turtle, Frontline, FRO, that's a $19 stock. Again, gap up, which gives us the opportunity to observe the stock, a pullback, and then if you buy the pullback, and I don't have the view up here on the chart, but what's again great about this stock, take a look at these higher lows, clear support levels along the way. Not a big mover, but very consistent for almost 6 hours. So the move started higher pretty much at 10 and ended at 6 hours, almost 6 hours of uptrend with a minor pullback along the way. So in terms of management, very easy relatively to the Arrow nightmare management. So that was this video. To elaborate which is best, I think the answer is within the chart. If the chart is manageable and tradable, and you can trade a high flyer, be my guest. Most of the time it's so risky, unpredictable, spreads, notoriously jumpy. Sometimes there are price halts which can lead to, gaps up and down, sometimes down, and you cannot protect yourself in this case. Okay, guys, if you have any comments, please do. Please share this video with your fellow day traders, and thanks for being here with us, and we'll see you in our next video.